Good morning, everyone. It is Friday, December 15th, half an hour before the market is going to open, and it is quadruple witching day, which means that there's going to be a lot of options expiring. There's going to be a lot of volatility, a lot of money being moved around. So this really is a day that we want to avoid trading new positions and opening new positions. You can day trade. You can catch a lot of movement upwards and downwards day trading, but in terms of holding overnight, this is a day that we really want to avoid trading. So let's take a look, especially because we have been overextended inside this market. So over here, S&P 500 went up parabolically. We've got a doji candle yesterday, slightly higher than the previous day close. So that is a sign of a market topping or reversing. So over here, we got these run-ups, and then we got doji candles, and then we went sideways. But in this case, we were parabolic. We got that doji candle. We could move sideways, but there's a high probability that we can start getting that pullback that this market really needs. So we want to be super careful today. We don't really want to open any new positions unless it's going to be hedges. And it's a great opportunity to close positions that have profit in them. So let's take a look at the futures market, see if, at least on the open, it looks like that we might start to get downward pressure today. And we're mostly flat, 0.1% roughly on the Dow, and then negligible on the S&P, and up tiny bit in the NASDAQ. So mostly random, mostly flat. Let's see how that developed. Okay, we can see right here at 5:30, there was a sharp movement downwards and a slight recovery in the S&P 500 in NVIDIA that fully recovered. So that's interesting to note that NVIDIA is stronger to the market, and maybe that could be the case for tech in general. Well, let's take a look at the QQQ. Much stronger recovery in the QQQ, but not quite to the whatever this was levels. But let's take a look. That was 5:30. Let's see if we had any economic reports at 5:30. Empire State Manufacturing Index. That's interesting because this isn't something that we would normally react really strongly to. So there must be, a really big change right here. So prior was 9.1. We believed that we were going to drop down to 3.7 was the consensus. We had a huge consensus range though, -5 to 6. That's really big. That means that overall economists did not have a good grasp on where this was going to land, but it actually ended up far lower than even the bottom of that consensus range. So to move from 9.1 to -14.5, that's a big move. So that probably explains why there is a big reaction in the futures or in the pre-market. Let's take a look at the futures. Yeah, so we were doing just fine. Looks like we were slightly up before the report, and then we just came crashing through because of that report, and we've recovered a tiny bit, but not much. So that is going to put maybe a slight downward bias in the markets as we open up, and we can see that we were just down because we were starting to head a little bit down, and then we really moved down after that report. So there was already slight downward pressure in the market, and after the report, we've got more. So we are going to open up with a negative bias. And you can see how throughout this pre-market, we've been responding to these lines that we've drawn very, very well. So I'm not going to move any of these. We're going to keep them the exact same. It could be just a sideways day, but if we break through this purple line that we're close to, if we break downwards, that's going to start putting a lot more negative pressure into the market. And then if we go up, there's a lot of levels of resistance, and especially that all-time high further up. So it doesn't really seem like we're going to get near there today. So today is probably going to be a more negatively biased day. Now on the open, we could head towards the previous close, so we could head up on the open because that's what the 70% chance probability of what's going to happen. But overall, I would still expect a downward bias in the day. And that doesn't mean that we'll come all the way down. It could just mean a sideways day with a slightly, excuse me, with a slightly lower close than today, but just a slight negative bias. So overall, we want to be very careful with quadruple witching, with these downward pressures in the market. So the trend of the market tells us we should still be long, but we're going to exercise our caution. We're going to be a lot more careful than we have been. And we started to exercise caution the last couple of days. And today is going to be like, great, we have the weekend coming up. We have the volatility from quadruple witching. We have the downward pressure on the markets, or at least a capping pressure in the markets. So the only positions I would be opening today would be hedges, and I'd consider taking profits. Now, some people may have fear of missing out. That is one of the most dangerous things that you can have in this market. Oh, it's moved up so much. Look, it's going higher. It's still strong. Let me open positions. Let me capture more. Or in anticipation, oh, it's going to be a pullback. I'm going to miss out on this big move downwards, this correction downwards. Let me put in a whole bunch of puts. That's not really what we want to be doing here. We want to be happy with the profits that we've made so far, moving up here. And then just when there is a time to pause, then you pause. When it's time to take a breath, you take a breath. You don't keep pushing it forward. And that's with everything in life. Right? If I was running a marathon and then I was at I'm going at a pace where I'm kind of out of breath, but I'm keeping up, that's not the time for me to push myself even harder. It's the time to just keep the pace. So we just want to honor where we are in the market, and that market says that where we are in the market, it says pause. Let's take a breather. Let's get neutral or very close to neutral, and just take a little bit of a rest here. Let the market do what it's going to do, and then after it does what it does, then we're going to be able to decide what we're going to do in response to it. So we have a view and an opinion of how it might develop. And so we're going to prepare ourselves for the actual event, and we're not going to front run the actual event. One thing I do want to take a closer look at, though, is the TLT. So we did break through that MA200. We were talking about that yesterday morning. It looked like we were going to open above the MA200, and then we would see where we went from there. Well, we went straight up from there, so we are fully above the MA200. How we open today looks like it's still going to be above the MA200. What I want to see is, does the low of the day stay above that MA200? Does it do it again on Monday when we trade on Monday? That's going to be very important. We did get volume back into this market. So after the FOMC, people, started, at least the bond market started waking up, and money went back into bonds. We'll see if they stay there, or if this pulls back, then that's going to correlate with a pullback in the NASDAQ, which looks like we got a pretty strong, more of a sort of a hammer, sort of a doji, like it mixed in between. We were actually down yesterday a little bit. I didn't realize that. We're actually down 0.09%, which is basically flat. But in the context of where we are in the market, it's significant that we got that down day and that we got that red bar. So we'll see if this goes sideways or if we start breaking below these lines that we've drawn before. So theme of today is, if you're doing day trade, separate your sessions of the first hour of the market, and then after that, and then the last hour of the market. And just expect a lot of volatility today. Expect the potential for a lot of traps, bear traps, bull traps throughout the day. So don't get caught by these traps. So like this, the super downward movement, if you got overly excited and say, oh my gosh, we're going to go down, 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 and then it's a little bit of a trap. We bounced from this level. So recognize when we're getting to extremes, and then just get out. Be happy with your profit. If I was here and we dropped all the way to here, this first green bar that we had, I'd be happy with that profit. I wouldn't be operating on fear of missing out and trying to capture the rest of this move. It's dangerous. So there's going to be a lot of traps today, potentially, because of the volatility and because we are at extremes in the market. So be careful if you're day trading. If you're swing trading, my suggestion and what I'm personally going to be doing is hedges only if I need new positions. Otherwise, I'm going to be taking profits on the highly profitable trades or going neutral on the ones that I still believe in but haven't developed their profits yet. So that'll be short and sweet this morning, because basically what I'm saying is try not to do too much today, and especially going into the weekend, and then we can resume trading on Monday. All right, so that's going to be it for today. I will see you in the aftermarket session.